Lady Gaga. Here it's 8:41. We're on Wednesday morning, middle of the week. Time to find out how the week's treating your IRA and your 401k up on Wall Street. To do that, we head downtown to the offices of Statler Financial Services. Phillip Statler is standing by. Phillip, good morning. How you doing?
Hey, Dave, good morning. How are you doing? It's a wet Wednesday here in downtown Sebring, or all over Sebring, I think.
Yeah, I got the bad news. It's going to be wet all day today, and the temperatures are going to fall into the 50s. I was saying earlier we should be happy with this. It's happening on a Wednesday. Valentine's Day is going to be luscious, and we'll be back in the 80s with sunshine for the weekend. If we got to have a crappy weather day, which, hey, we need the rain, let's do it in the middle of the week before a holiday like Valentine's Day, right?
Absolutely. And, hey, think about it. You're not selling mattresses today, so a good thing it wasn't yesterday, right?
Oh, Lord, I was looking at that chance of rain mid-afternoon and saying, please no, because I was dancing around in front of Mattress One selling mattresses, and it turned into an absolutely lovely day, and we had a lot of folks show up, too, so I appreciated that. We start out the morning with a bunch of data dump information and news information. We were talking before we went on the air, Phillip. The Federal Reserve wants to see inflation at 2%, and the consumer inflation rate came out this morning dead flat for last month. And we can't even get up to 2% inflation. Now, you and I both know that the cost of our groceries hasn't necessarily stayed flat, but overall, the cost of living, the Federal Reserve just can't seem to get the inflation rate up to 2%, can they?
No, they really can't. Now, and that, the economists and the analysts were all expecting that CPI would increase by 1/10%. Well, it stayed flat. Which, again, like you said, means it's not increasing, which the Fed wants to see inflation continue to increase. And I find it interesting, if you look at the last 12 months, we've actually seen the cost of living decline from 1.9% to 1.6%. So 0.3% swing there. That's not also bidding well for what the Fed really wants to see happen. Now, you talked about the inflation as far as groceries. We're seeing those things go up. You and I know when we go to the grocery store. But what's helping that is gasoline prices in January were down a little bit. And so
Which that inflation rate look a little bit different from the overall that they reported.
Exactly. Yep. That's exactly the change.
It's interesting. Somewhere in Washington, D.C., Fed Chair Paulson is banging his head against a wall because one of the concerns, and we were talking about this before we went on the air, is that the Federal Reserve might now actually see another interest rate increase as a way to increase inflation. Normally, that's a way to counteract it. Now they're looking at the notion we got to raise prices somehow. Let's make money more expensive.
Well, yeah, and you know what happens when that happens, right? The cost of money goes up. That means it typically will slow the economy more. So I'm not sure that that'll be the key, but it could be, because they really want that inflation rate up there. And however they raise interest rates, it may affect the real estate market more than what they think.
Art more than science in economists. Why they called my college major the dismal science, because there's more art than science sometimes, isn't it?
Yeah, it is. And talking about, housing and real estate, the mortgage number came out for last week, and mortgage applications dropped 3.7%. And I thought the interesting number I saw there was a year ago comparison. And so if you look at the overall mortgage applications were down 11% from where they were a year ago, and interest rates aren't that much different. But
for all the threats, they really haven't gone up that much. The side number that you shared with me scared me even more, because you and I have looked at mortgage apps and saying, well, a lot of it is the refinances, and they aren't there anymore. But new mortgage applications for new home purchases really fell, didn't they?
Yeah, they did. They fell 6% for last week, and they're down 5% from where they were a year ago.
And that, by any measure, is El Stinko, because the housing market, especially the constructed housing market, that bleeds over into so many other allied fields. It just gives us more indication that the economy isn't dead by any measure, but without a doubt, it's slowing down.
It definitely is. I mean, there's so many indications that tell us that it is slowing down a little bit at a time, which is good. You don't want to see it drop all of a sudden, but yet we need to recognize that at least right now, it looks like it's slowing. And And if we change focus a little bit, Dave, when we look at earnings,
Hmm.
we're going to see some of that today because we got more losses or not losses, but misses than we see overdone. So, that's one of the things I looked at today too.
Yeah, absolutely. I'm starting to think of an old term that I remember during the 80s and the 90s when the Federal Reserve was talking about managing us to a soft landing with a recession on the horizon. It almost looks like we're coming in for a soft landing, and if it actually turns into staving off a recession by just slowing down our growth rate to a crawl, maybe they'll deserve a gold star. But for the moment, it's no fun watching us slow down, is it?
No, it's really not. So let's kind of look at earnings now, Dave, as we kind of look at what's happening across the board. Like I said, I have more misses today than I have hits. So
Well, dear
um,
of you.
yeah, I know. But let's start with one that did come in above forecast, and that's Hilton. Hilton Worldwide. Um, they beat the street by about 10 cents a share. Their revenue was better than expected, as well as they've got an upbeat forecast for the current quarter. So they've got high demand when it comes to travel, and they're getting higher prices. So all those are some good things that are happening with Hilton, and they're up about 3.5% this morning before the market gets going this morning.
That's good to hear. Other reports of indications?
Well, let's keep on the travel note here. And if we look at the TripAdvisor missed by 2 cents a share. They on your big losers list this morning?
I was going to say, I was wondering what that meant because they're down 5.5% on my list this morning. They're one of my big losers for the day.
Well, they missed on earnings by about 2 cents a share. They beat on revenue above what the street had forecasted. And they had some other good things. I mean, average monthly visitors was up 2% over a year earlier. But I think this is probably what's killing them right here is that their unique hotel shoppers fell by 11%. And that probably is the key indicator there that's hurting them the most today. And you're right, they're trading down about 5.1% this morning before the market opens up.
Putting those two metrics together, it sounds to me like they've developed a real loyal cadre of regular users that just isn't growing as fast as they needed to.
Well, that's true. I mean, I think that's probably the case there. So now let's shift a little bit. We've got Dish Network, and they came in a little short of estimates, 3 cents to be exact. Revenue again was above analyst projections, and now they say they've been hurt by an unexpected loss in subscribers. So they didn't quite forecast that number right, and they're down 7% this morning.
They're right at the top of my loser list, which probably means expect to get your mailbox full of Dish Network offers soon, right?
Well, yeah. Let me. This one I think is probably, if it shows up on your list, I think it's probably one of the biggest losers. Groupon.
Ooh, how
Yeah.
bad?
Groupon fell 3 cents shy of the estimates. Their daily deals did see revenue beat estimates, but they say that their active North American customers fell by 2.5% from the prior quarter. And they're down 12.12% this morning.
Somebody in the executive suite at Groupon is not happy this morning, are they?
No, they're really not. That's a pretty big miss there. I'm trying to look see what else. Oh, I got another big miss here too. Not a name that you and I would recognize probably, but Teva Pharmaceutical. They missed by a penny a share. Their revenue was above forecast, but they gave weaker than expected full year guidance, and they're trading down almost 12% this morning.
And given all of our concerns for the months ahead, guidance is critical this time around on this earnings season, especially. A little optimism on the macro front. The word is that President Trump is expected to sign the budget deal, so government shutdown is at the very least mostly off the table at the moment. And China was making some noise this morning that we're actually getting along on those trade talks, given the fact that we've got a predominantly not favorable set of earnings reports this morning. I got to assume that's probably the reason I'm seeing mostly green ink 45 minutes before we open up. Phillip, let's quantify it.
Well, I think that's right. And plus, the other thing I think, Dave, too, is that they're talking about extending the talks and extending that deadline with China. So that's another thing that's probably putting some optimism into the markets. But right now, everything is pretty much green except for the hard assets. We got the Dow up 71, the Nasdaq's up 28, and the S&P 500 is up 6.25. So all in positive territory this morning. Gold and silver are basically even right now. And crude oil is creeping back up today. It's up to $53.44 a barrel right now, Dave.
The one thing we want to go down is going up, right?
Yeah, isn't that the way it always works?
I think so. Overseas, Asia reacted very positively to the positive news out of China on our trade negotiations. Their markets were all up pretty solidly. Or Europe is also trading up midway through their day. Phillip, I want to turn this information into a secure retirement. This stuff scares me. How do I find you on the phone?
Dave, now's the time. Give us a call at 382-0037. Follow us on our Facebook page at Statler Financial Services. We take what we do every morning, we post it onto Facebook as a video. So look for it there. If you happen to miss us in the morning, it should be there by lunchtime or so every day. And then follow us on every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m.
And we'll be back again here tomorrow morning with an up-to-the-minute look at what's going on, whether this optimism overseas can carry us through for a little bit. It'd be a nice thought, wouldn't it?
Yeah, it would. Hey, enjoy the rest of your rainy day today, and I will catch you in the morning, Dave.
You got it, my friend. It's 105.7.